Good morning, good afternoon, and good evening, folks. This is your host, Naeem Aslam, who works as a Chief Market Analyst at AvaTrade, and welcome to our weekly series of Masterclass. In today's subject, we'll be covering how to trade indices. This has come at a very intriguing point when we are about to see the US earnings and the influence of these earnings on the stock market. Now, before we begin, as always, please give me a sound check. Thank you, Andres. There you go, first out of the gate. So, and everyone else, please just give me a little bit more sound check and a screen check if you can hear me and if you can also see my screen. Thank you, Amutha. Good to see you guys, and it's a pleasure to have everyone else in the room with us. Because in today's segment, obviously, we'll be discussing about the major stock market indices, but at the same time, we'll be also looking at why the market is doing what it is doing and what are the factors which are very much influencing the market's move. How does that sound? Does that sound like that's something that you are looking for? That why the markets are moving in a certain direction and where the markets could be heading in the coming days, and more importantly, what are the factors that are going to move the markets? That is what we'll be discussing, and of course there will be a technical analysis on the back of that as well. Someone is saying they can't see my screen. My friend, I think something is just wrong on your side because everyone else can see my screen. They are saying that they have no issue in relation to that. So let me know if the still issue exists. We can look into that. Okay. How about now? Can you guys see my screen now? Because now you should be able to see the risk warnings in front of you. Okay, great, Henry. Thank you for that. So, bit of a housekeeping, as always. Contact details for our Twitter handle is right in front of you, and for our YouTube is there as well. As always, it is quite an important thing to talk about our unique technology that we have at AvaTrade, which is called AvaProtect. It's a revolutionary one-click risk management tool available on the AvaTrade web trader and on the AvaTrade Go app. With AvaProtect, you can purchase protection against loss for a defined period after opening a position. If the protection ends and you have an open position that is losing, AvaTrade will reimburse the loss directly into the trading account. The only cost is the AvaProtect fee itself. So this is quite an essential. We have this function on our platform. It's kind of an insurance function. If you guys wanted to know a little bit more about this one, so do get in touch with your own sales manager, who will be able to give you a lot more detailed information on that. So some of the study questions in front of you are the very generic questions which we cover in all of our webinars, especially in these type of webinars, and I'm not going to spend too much of time on them, but it is important for me to bring the newbies up to the speed. So for those of you who have attended the webinars before, answer me this particular study question. Why do you want to trade indices? What is the importance of that? I'll give you the clue. One of that is to minimize risk, right? Because of hedging. What are the other clues? Could you guys give me a little bit more? Why do you want to trade indices? Great. So someone is saying that it gives you wider exposure, because when you trade indices, then you get exposure to all the major stocks. For example, in terms of the S&P 500 index, when you trade that index, you get an exposure to all the oops, what happened here? Let's go back, page up. Intriguing. What happened here? Erase all of them. Let me go back to that. Okay, here we go. So that's one of the reasons. And now someone is saying that it is also more, Amutha is talking about momentum. That is absolutely true as well. You would trade indices because they have a higher volatility, meaning we could see up and down moves a bit more and less of this consolidation area, which we are currently in right now. But usually what you will see in terms of indices is really sharp moves to the upside, or a trend where we could see, so either it could be like that, and so any of these particular trends could be very much possible when it comes to trading indices, and that means more momentum, more opportunity to day trade with them. And Noor is saying they are more profitable. Yes, they are more profitable because it's easy for them to find the direction in them, as compared to the individual stocks. So that is absolutely correct as well there, Noor. Thank you for that. The inverse of indices is the next topic. The inverse of indices, really what it means over here is the VIX index, right? So VIX index always moves in opposite direction of the S&P 500. So if the S&P 500 moves to the upside, what the VIX does is it moves to the downside. And then if this moves to the downside, the VIX moves to the upside. So that is something that all investors and traders kind of need to keep in mind when they are looking at the fund flow. Again, we will look at which way that the funds are moving, which sector is really very much, whether this is your tech sector where we are seeing that, or whether it is the overall market, or where we are seeing the momentum moving, or whether these are industrial stocks where we are seeing the we got kicked out for some strange reason, and I couldn't really figure out the reason why that was happening, but we got kicked out. But here we are back in here with you guys. Again, if you guys can see my screen, if you guys can hear me very well, please do give me a sound check one more time. Okay, great. Thank you very much. So again, apologies. I don't know, some sort of a technical problem happened. It kicked out from us. It kicked me out from the other session, so I had to log back into this one. But these are the technical difficulties which do happen. So the fund flow we were talking about over here, I will repeat that. So we will see whether the tech is where the opportunity is really currently, whether we should be looking at the industrial sector like the Dow Jones really, or whether we should be looking at the overall market, which is the S&P 500. So that is what really we'll be talking about in terms of these three over here. So where the opportunities are. And then finally, we'll be looking at defining the levels. What are the levels that we would be looking at, and defining a strategy. Now, allow me to bring out the MT4 platform in front of you, so that we can really start measuring that particular move and then start looking at what is happening into the market. But before I kind of start going into details, one of them, so a few things that we need to discuss over here, which are quite important, is number one, the market is worried about inflation, right? Because higher inflation is certainly a major issue for the market, right? Number two is the growth. Growth is obviously slowing down for the global market and of course for the US market. Yesterday, we saw the IMF coming out with their prediction where they've lowered the growth forecast for the global economy and of course for the US economy as well. The third issue is really the supply chain issue, which we all know that we cannot get enough supply chain when it comes to that, and massive inflation is very much coming because of that. The fourth issue is, of course, the rising oil prices. So all of these factors together are very much influencing the sentiment into the market. So investors and traders are just not sure what to do with these ones and how to factor in. And above all of these ones over here, there is one more factor which matters the most, and that is the QE, or the monetary policy, right? Because the Fed, which sits on this side of the equation, is thinking of tightening up the monetary policy. And if they do that, that is also going to influence the sentiment. That is also going to influence all of these ones over here. And that is something, again, from the fundamental side, we need to keep in mind on. Keep that in our mind. So once again, what we need to understand in relation to the market is, of course, number one is inflation. Inflation is going up. It's an issue for investors. Growth, which is going down, important for investors. Supply is very much in a bottleneck. It's creating a lot of pressure for investors over here, and oil prices are very much increasing, and all of them are adversely impacting the sentiment into the market. And then that is the reason that this particular move over here in the S&P 500 index is very much going to the downside. How far it is going to go, how low it is going to go, that is all what we'll be discussing in a lot more detail. But before I do that, I just wanted to make sure that you guys understand perfectly what I have discussed earlier. So what are the factors that we need to be looking at? And the one important thing is, of course, the earnings now. So earnings are also that we need to be mindful of. Earnings are going to drive the overall sentiment in the market. If earnings are good, then we are likely to see the S&P 500 resuming its upward momentum. If earnings are not good, we are likely to see the S&P 500 index moving further to the downside and taking further move to the another leg lower from here. So earnings are very, very good. Today we have received the earnings number from JPM, which were very good. So this week it is all about banks earnings, which are going to be very much focused on, and then from there onwards it's going to be a tech earnings, and then from there onwards it would be like industrial stocks, they would be coming up with them, and several other sectors would be also be following them. So again, the earnings overall from all of these sectors is very much going to determine the momentum into the stock market. That is something very, very important. So overall, what we have once again is we have inflation as a one important point. Keep an eye on this one. Number two, we have a QE. Again, the data. Number four, over here, we have a growth to look at, which is going down. Number four, we have earnings, as we mentioned earlier. Okay, and number five, we have oil prices, which are very much surging right now. So these are the factors overall in the market which are going to influence the price of the S&P 500 index, whether it will go up or whether it is going to go down. Does that make sense to you? Any questions in relation to that? These are very, very important fundamentals that we have discussed so far in this one, and that is going to be very much influencing the market. Now, in terms of a technical price levels, what we really need to mention over here is, first of all, this over here is your 200-day SMA, simple day moving average. Okay, so over here in green is your 200-day SMA. Over here, this one, this is your 100-day SMA. Over here in pink is your 50-day SMA. Simple day moving average. Now, how to put these moving averages on the chart? If you don't know that, if you've never done it, let me show you. So you go over here, insert, you put on over here indicators, trend, and then over here you have your moving averages, right? So you over here you change that to 200, 100, or 50, and then you can change the colors accordingly as well. Now, the importance of these moving averages is, as always, that something that all investors and institutions would look at is the 200-day SMA. When the price comes close enough to this particular one, this is considered as oversold. And then what we usually see is a momentum to the upside, a move to the upside. However, if the price fails to stay above this 200-day simple moving average and breaks below that, that means that the bears have taken control of the price, and the current price is more likely to go to the downside, and it can continue to move to the downside until it reaches an important level of support. And that important level of support under the current circumstances is very much in line with our psychological support of 4,000 in terms of S&P, running all the way to 4,116. So if the price doesn't stop over here price can continue to move to the downside over here, and then it can come into this area of support. Now, if you haven't participated into this rally, what you could do is potentially put your stop loss above the 100-day simple moving average, and then let this trade continue to move to the downside, and then wait for the price to first of all come into this level, the lows of these ones, that 4,262. Then your risk to reward ratio really is going to be, this is your risk, right? Only your risk is only very, very small currently. It is only this much because that's where the price is trading. But your reward, because you would be looking at least this much, so you have a 2-to-1 risk to reward ratio. That is your reward number one. And secondly, you'll be looking at the S&P for the price to test the 200-day simple moving average. This becomes your 200-day simple, that becomes your second reward point right over here. Now, obviously, you will take some profit off here, you will take some profit off here, and then if the price continues to move to the downside, then we would be looking at the next important level, which is going to be over here. So overall, you are risking only this much right now to gain from here to all the way to here. Between that, you are looking at the profit taking level number one, profit taking level number two, profit taking level number three. So that would be really the target that I would be looking at. Now, in terms of the RSI, what we really see is that the RSI has moved away from its oversold area, because 30 is oversold and 70 is overbought. Now it is moving to the upside, as the price is also moving to the upside. As you can see that the price is moving to the upside, and then we are seeing that as well. Now, of course, if the price breaks this upward trend line, the RSI breaks this upward trend line and moves lower, then it is very, very likely for the prices to move to the downside. One important price point in terms of the S&P 500 index, which you really got to be very much focused on, really is the low of this particular candle right around over here. So this is the level that I would be very much focused on. So the lows of these ones. So if the price, let's say if the price comes in over here, right, and right around over here, so this is what I'll be looking at. I'll be looking at the high of this candle. The high of this candle is 4,407. Obviously, if the price breaks above the highs of that one, then that means you need to reverse your trade at that time. What do I mean by that? So let's say if the price goes up and it breaks the 100-day simple moving average and then closes above this, the high of this one, then what would you do is completely opposite. What you could do then is place your stop loss below the 100-day simple moving average, wherever the price is. Take that long trade as of then, and then let it continue with at least first our price target number one over here, price target number two over here, and then price target number three over here, the all-time high. Because if the price breaks the highs of this one, breaks the highs of this one, then it really means that the price is going to go back towards the all-time high. We are making a higher move. However, something which is very much concerning me for the last few days is the slope of this 50-day simple moving average, which has started to come to the downside. And there is a possibility that this 50-day simple moving average may actually cross below the 100-day simple moving average. And if it happens, that would be very, very bearish. Under those circumstances, what we could really see then is, as we've discussed earlier, is that the price moving towards the important level of support over here, or even lower than that. Price could actually be breaking the 4,000 sort of a price level, and then it could really be going somewhere around these particular price level of 38 to 39. That could be your next level of a support if the price comes. So let me put both of the price levels on the chart for you to just keep that in mind. So the first support level is going to be that 4,033 to 4089. This is your second support level. So all the price action is very much based on over here, what the price is doing right now. Now, as for the Dow Jones Industrial Average, The something that I fear from the S&P 500 index is already about to happen. What do I mean by that? The 50-day simple moving average, which is over here, is about to cross below this 100-day simple moving average, which is over here. This is going to signal a very bearish, this is going to send a very bearish signal, meaning the price which is trading over here could very much continue to drop and then drop until the price comes into this area of support. So where is the opportunity under the current circumstances? Under the current circumstances, what one can do is put your stop loss above the highs of this one, or put your stop loss above where the 50-day simple, 100-day simple moving average is trading over here. Then what becomes is your risk becomes this much, right? Depending whether you wanted to put your stop loss over here or over here. This would be also okay, and then this would be very, very safe to do it. So this over here is your risk over here, right? In terms of a reward, what we would be very much looking at is not the 100-day simple moving average. We would be very much looking at for the price from here to going all the way to over here. That becomes your reward under that circumstances. So your risk, and then this becomes your reward. So that is the opportunity over here. Now, in terms of the RSI, what we're really looking at is that can the price break below this one? Because if the RSI breaks below the low of this one, then it surely means that the prices are only and only moving one way, and that way for the price action is moving to the downside. And that is what we have to be very much focused on in the coming few days in relation to this one. Any questions, folks, in relation to this one? So Ronan, you are asking me that you bought it at 4,525. I think that the stars are lining up for the price action to move to the downside more than anything else. But wait for the final confirmation before you do that, and then that is the 200-day simple moving average for the Dow Jones Industrial Average, and also for the S&P 500 index as well. S&P 500 index, as we've discussed earlier, is still quite far from that. So you have bought it 45 right somewhere over here at the top. So my friend, you're already in a massive loss currently, unfortunately, because you bought it right at the top. So the first warning signs could have been for you right over here when the price started to drop below the 50-day simple moving average, or over here. But now the angle of this one is showing to me that there could be more pain. But again, keep an eye on this one. If the price breaks again the 4,273, that means more weakness could be coming in terms of the price action. However, if the price breaks the highs of this particular candle, you could be safe, and then you may want to hold on to that position. Now, the last one that we wanted to discuss is the tech index, the Nasdaq 100. The Nasdaq 100 is very much trading in line with what is happening with the Dow Jones Industrial Average. The price is trading below the 50, 100, and just above the 200 simple moving average. Now, obviously, we have seen this massive downtrend when it comes to the tech stock. And remember, now the tech stock earnings are going to be very much focused. The focus in terms of the tech stocks is going to be supply chain. How constrained the supply chain really is. If the constraint remain on the supply chain, then we are likely to see this momentum continuing to the downside, moving further below than that 200-day simple moving average. That is what we'll be very much focused on. Can they get access to chips? Can they get access to the physical stuff that they need to make those technical or those physical equipment? Now, in terms of a price action, what we would be very much focused on in terms of a support level would be right at the bottom of the chart. So this would be our support level number 1, And then after that, what we'll be focused on is going to be this area over here. So we have two support areas which are very, very close to each other. So this is your support area number one, which runs from 13,352 to 13,574. And then you have another support area, which is just around that 12,900 and to 13,139. So these are the two support areas that we'll be focused on. The immediate support area under the current circumstances really going to be where that 200-day simple moving average is trading. So see if the price can really find some sort of a support just around this particular price level. So that is that's this consolidation area right over here. So this is the area that I'll be very much focused on right over here. So see if the 200-day simple moving average holds or not. In terms of the strategy, what you will be doing, again, placing your stop losses right above that 100-day simple moving average, letting this continue to move to the downside, retest of this one as your first support, or you take profit number one, and then it breaks from here. This is your support level number two, your profit taking level number two over here, and then finally your profit taking level number three right over here. So let me know how this one goes for you guys. Now, unfortunately, the time has run out for us, so we have to park things out over here. But I will be back next week with more analysis, with a new topic next week. And remember, you can follow us on our YouTube channel on a daily basis and on Twitter on a daily basis as well. That's all for now. Thank you for taking the time out as always. And it's been a pleasure to be with you guys. Have a good day.